Imagine waking up tomorrow to find out that a single group of people secretly controls over $1 trillion of your money, your future, and your freedom. You never even knew it existed. That's not the plot of some Hollywood thriller. That is the reality of your financial system today. You are about to uncover a story that the mainstream media won't touch, the banks won't admit, and the regulators are too afraid to stop. This is the story of a $1 trillion market manipulation so massive, so carefully hidden, that once you see it, you will never look at your savings, your stocks, or your retirement the same way again. Before we dive into the dark corners of global finance, do me a quick favor. Hit that like button right now and subscribe to Macro Truth. Because in the next 20 minutes, I'm going to show you exactly how the richest players on Earth are playing a rigged game. And more importantly, how you can protect yourself before the next crash. Stick with me, because what you don't know has already cost you thousands of dollars. Let's start with a simple question. What if I told you that the price of almost everything you buy, the value of your house, the balance in your 401k, even the cost of a loaf of bread, is not decided by natural supply and demand? What if it's decided by a handful of secret meetings, untraceable swaps, and algorithms designed to steal wealth from the middle class? You'd probably call me a conspiracy theorist. But here's the thing. Every single year, the world's largest banks get caught manipulating the most important numbers in finance. And every single year, they pay a fine that is less than 1 day of their profits. And they promise to never do it again. Then they do it again. Take the London Interbank Offered Rate, or LIBOR. For decades, this was the most important number in the world. It determined interest rates on mortgages, student loans, credit cards, and trillions in derivatives. And what did we learn in 2012? That a group of traders from banks like Barclays, Citigroup, and Deutsche Bank were simply texting each other, "Hey, let's move the number up a tiny bit today." They called it the cartel. They even used code names and champagne to celebrate their wins. That single manipulation cost ordinary people billions. But did anyone go to jail? Almost nobody. That was just the beginning. Now, fast forward to today. The manipulation hasn't stopped. It has evolved. It has grown 1,000 times larger. And the new target is something even bigger than interest rates. It's the entire stock market, the bond market, and the most explosive market of all, crypto and commodities. I'm talking about a $1 trillion invisible hand that reaches into every corner of your financial life. And the mechanism is called spoofing and layering. Sounds technical, but it's actually very simple. Imagine you want to buy 1 million barrels of oil. If you just place a buy order, the price goes up. So what do? You place a massive fake sell order first. You trick the market into thinking everyone is selling, prices drop. And then you swoop in and buy everything cheap. A few seconds later, you cancel your fake order. It's completely illegal. And yet, between 2015 and 2020, the Commodity Futures Trading Commission, the CFTC, documented over $1 billion in fines for this exact behavior from just 3 banks. But here's the secret they don't want you to know. Those fines were for tiny slivers of the actual manipulation. The real action happens in the shadows of the dark pools and high-frequency trading firms that you have never heard of. Let me name names, because Macro Truth is about real evidence, not rumors. In 2020, a court unsealed documents showing that a group of precious metals traders at JP Chase had been running a massive spoofing scheme in gold and silver futures for nearly a decade. They called their chat room the London Whispers. They manipulated the price of gold every single day. And how much gold are we talking about? Enough to move a market worth trillions. The traders would place hundreds of millions in fake orders, push prices down, buy real contracts, and then cancel the fake ones. One trader even bragged in a message, "The game is rigged and we are the house." JP Morgan paid a record fine of almost $1 billion. But again, no executive went to prison. The bank's stock price barely blinked. Why? Because the people writing the laws used to run these banks. It's a revolving door. So the $1 trillion question is, if gold and silver can be manipulated, what about your stocks? What about Bitcoin? The answer will shock you. In 2021, a little-known report from the Wall Street Journal dropped a bombshell. They analyzed trading data from the previous 5 years and found that a single high-frequency trading firm, which they did not name but everyone in the industry knows as one of the top 2, had placed orders that influenced over $5 trillion in volume. And they did something strange. They consistently bought stocks just before big price jumps and sold just before big drops. Statistically, the odds of that happening by chance were less than 1 in a million. How do they do it? They use something called latency arbitrage. Basically, they pay millions of dollars to place their computer servers physically inside the same buildings as the stock exchange servers. They get to see your order 1 millisecond before anyone else. 1 millisecond doesn't sound like much, but when you can trade 1 million times per second, that millisecond lets you front run every single person in America. You buy a stock, they buy it 1 millisecond earlier and sell it back to you for a tiny profit. Do that a billion times a day, and you have hundreds of millions in risk-free profit. That profit comes directly out of your retirement account. The SEC knows about it. They have done nothing. But the real trillion-dollar manipulation, the one that makes everything else look small, is happening right now in the bond market. The U.S. Treasury market is the most important financial market on earth. It funds the government. It sets the baseline for all interest rates. And it is completely broken. According to a 2022 study by the Federal Reserve Bank of New York, over 60% of all trading in U.S. government bonds now happens in so-called off-platform deals. That means no exchange, no public record, no transparency. Just a few giant banks trading directly with each other and with the Fed. They decide what yield you get on your savings account. They decide the mortgage rate you pay. And they decide how much the government borrows. If that sounds like a centrally planned economy, that's because it is. They just don't call it that. They call it quantitative easing and open market operations. But let's call it what it really is. A mechanism for transferring wealth from the bottom 90% to the top 1%. Let me give you a concrete example from 2023 that most people missed. In March of that year, when Silicon Valley Bank collapsed, the Fed created a new lending facility called the Bank Term Funding Program. Through that program, the Fed allowed banks to borrow money using their treasury bonds as collateral, but get this, they valued those bonds at their original price, not the current market price. That means banks that had lost billions on their bond portfolios were instantly made whole by the Fed. Who paid for that? You did, through inflation. The Fed printed over $300 billion out of thin air to bail out the banks. That is market manipulation on a scale that Julius Caesar would have envied. And they did it quietly over a weekend, with no debate, no vote, no public notice. That is the trillion-dollar manipulation. It's not a crackpot theory. It's the actual operating procedure of the modern financial system. Now you might be thinking, okay, this is terrible, but what can I do about it? I'm just one person. That is exactly what they want you to think. They want you to feel powerless. They want you to keep your money in their banks, keep buying their stocks, and keep trusting their numbers. But here's the truth. Once you understand the game, you can change how you play it. The first step is to stop treating the stock market as a safe, long-term investment. It's not. It's a casino where the house has a supercomputer. That doesn't mean you should avoid it. It means you should understand that the S&P 500 is heavily manipulated by a few large institutional traders who use derivatives to suppress volatility. There is a name for this phenomenon. It's called the Volmageddon of 2018, when a single short volatility trade blew up and wiped out $1 trillion in 2 days. That trade was placed by a fund called Sorter 18th. The banks knew it was coming, they positioned against it, and retail investors lost everything. The second thing you can do is diversify into assets that are harder to manipulate. Not impossible, but harder. Physical gold and silver, held by you, not by a bank, are one example. Bitcoin, love it or hate it, is another. Because Bitcoin's supply is fixed and its ledger is public, recreating the kind of spoofing that happens in stocks is much more difficult. Does manipulation happen in crypto? Absolutely. Pump and dump schemes, wash trading on unregulated exchanges, it's all there. But the difference is that in crypto, the manipulation is often easier to see and avoid if you know what you're looking for. In traditional markets, the manipulation is hidden behind a wall of legal loopholes and friendly regulators. That is far more dangerous. There's a third, even more powerful action you can take. Stop consuming mainstream financial news. CNBC, Bloomberg, the Wall Street Journal, they are not your friends. They are owned by the same conglomerates that own the banks. Every time you see a headline that says stocks rise on strong jobs report or oil falls on demand concerns, understand that the real reason for the move is often a single large trade that no news outlet will ever report. The stories they tell you are just narratives to justify the manipulation after the fact. Instead, learn to read the flow of money. Watch the central bank balance sheets, follow the filings of big hedge fund managers. That is where the truth lives. And that is what macro truth is all about. Empowering you with the real data that the mainstream ignores. Let me share a specific example from just 6 months ago that will make your blood boil. In late 2023, the price of silver spiked 15% in 2 weeks. Everyone thought it was because of industrial demand. Then, 2 weeks later, it crashed back down. What happened? An investigation by a small online publication found that 2 weeks before the spike, a single London bullion bank had taken a massive short position, betting that silver would fall. When the price unexpectedly rose, that bank faced billions in losses. So what did they do? They called their contacts at the COMEX exchange, the same people who used to work at that bank, and suddenly the exchange raised margin requirements on silver futures. That forced small traders to sell, crashing the price. The bank's short position was saved, the small traders were wiped out, and not a single regulator said a word. That is the kind of manipulation that happens every single week. It is not a bug, it is a feature. So why doesn't anyone stop it? The answer is simple. The people who could stop it are the ones benefiting from it. The heads of the SEC and CFTC for the last 20 years have come from either Goldman Sachs, JP Morgan, or Citadel. That is not a conspiracy. That is public record. When you go from regulating Wall Street to working on Wall Street, or vice versa, you're not going to bite the hand that feeds you. The fines are just the cost of doing business. One former trader from Deutsche Bank said in a leaked recording, "If you ain't cheating, you ain't trying." He was never prosecuted. He now runs a hedge fund. That is the reality of the trillion-dollar manipulation. They don't even try to hide it anymore, because they know you're too busy with your life to pay attention. And that is exactly why I am making this video, and why Macro Truth exists, to wake you up before the next big reset. Now let's talk about the end game. Every manipulated market eventually reaches a breaking point. The Federal Reserve has printed over $5 trillion since 2008. That money has to go somewhere. It went into stocks, bonds, real estate, and crypto. But the underlying economy, the real economy of wages, productivity, and small business, has not grown nearly as much. That means we are sitting on the biggest asset bubble in human history. And bubbles always pop. When this one pops, the manipulation will become obvious to everyone. But by then, it will be too late. The banks will be bailed out again. The wealthy will have hedged. And you will be left holding the bag. That is the future we are heading toward unless more people understand what is happening right now. But here is the good news. You have already taken the first step. You are watching this video, you are questioning the narrative, you are seeking the truth, and that puts you ahead of 99% of people. My goal is not to make you paranoid. My goal is to make you prepared. Start by looking at your own portfolio. What are you holding? Are you in a target date fund that has hidden fees and is heavily weighted to manipulated large cap stocks? Are you in a savings account earning 0.1% while the bank lends out your money at 8%? That is the quietest manipulation of all. It's called the spread. And it transfers trillions from depositors to bankers every decade. The solution is simple. Move your cash to a high-yield savings account or short-term treasury bills that you buy directly. Cut out the middleman. Take control. For your investments, consider a simple barbell strategy. On one end, keep enough cash or short-term bonds to survive 2 years of no income. On the other end, invest in assets that cannot be printed or manipulated as easily. Hard assets like land, energy stocks, gold, silver, and a small allocation to Bitcoin. Avoid the middle, which is long-dated bonds and speculative growth stocks. That middle is where the banks are most active. That middle is where the next crash will be centered. You don't need to be a genius, you just need to be aware. And that is the only reason I am telling you this. Not to sell you a course or a newsletter, I don't have one. I'm just a person who got tired of watching honest people get robbed by a rigged system. And I started Macro Truth to share what I learned. Before we wrap up, I want you to do something for me. If this information made you angry or even just curious, click the like button right now. It sounds small, but every like tells the algorithm that people care about the truth. And more importantly, subscribe and turn on the notification bell. Because in the next video, I'm going to reveal the exact names of the hedge funds that are positioning for the coming crash. You will not see that story anywhere else, and I need you to be there when it drops. Now, I want you to look at your screen. I want you to think about the fact that right now, as you are reading this, somewhere in a glass tower in New York or London, a trader is placing a $1 billion fake order. They are doing it because they know no one will stop them. They are doing it because they know you have given up. But you don't have to give up. You just have to know the game. And now you do. So here is my final question for you, and I want you to answer it in the comments below. What is the single biggest manipulation you have personally seen in the markets? Is it the meme stock freeze of 2021? Is it the silver squeeze that suddenly got halted? Or is it the way your bank changed your interest rate overnight for no reason? Share your story in the comments. Let's build a library of evidence together. And don't forget to share this video with one friend or family member who still believes the stock market is fair. Because if everyone knew what you now know, the manipulation would end tomorrow. They're counting on your silence. Break the silence. I'll see you in the next one on Macro Truth. Stay skeptical, stay free, and never trust the house.